Now, another way of doing that, a little bit more complicated, is going through what is known as a Fibonacci retracement. I don't normally will teach this in an introductory course, but I want to be able to present to you how deep you can go when you study technical analysis. Now, the Fibonacci retracement system, I'll explain to you how it came about. It was actually invented by, or it actually came from a mathematician who lived in the 1200s, whose name was Leonardo Pisano, who was later more popular known as Leonardo Fibonacci. Now, this mathematician loved to review relationships in nature, and he loved working at numbers. And in his spare time, he would craft numbers and look at relationships between how animals would give birth to one another and how many there would be. And he would study the waves of the ocean and see how high and low the waters would be, and he would try to calculate that. But as much as I don't know how exciting that could be then, and he came up with something called the Fibonacci series of numbers. You may have encountered this perhaps in your college entrance test. The Fibonacci series of numbers looks like this: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, and 55, and so forth and so on. But if you want to know how the series of numbers were calculated, all you simply do is get the first number and add it to the number next to it. So 0 plus 1, 1. 1 plus 1, 2. 1 plus 2, 3. 2 plus 3, 5. You get the picture over and over again. Now, the nice thing about that is not so much as the number itself, but in how percentage degree difference is one number to the next one. And for example, if I were to continue this series, 21, 34, 55, 89, 144, and 33, you will note that every time it incrementally goes higher, it does so by 61.8%. Yes, you might say, big deal. But let's just keep this number first in view so you can see why this number becomes very important later on. And if I were to go downwards, it would be a retraction of 38.2%. Add these two numbers and you have 100%. So one of the other things that the study of the Fibonacci ratio came to be able to unearth was very much highlighted when people started to study the shell of a snail and how this geometric spiral would spin out from one to another. Now, this particular type of spiral becomes very important in the study of Fibonacci, because the spin out rate of this as the shell becomes bigger was spinning out by a ratio of 61.8%, following the same spiraling element or this number series that you see here. In fact, when you study the movements of the way petals of flowers actually come out, you will notice that lots of flowers out there, they follow this same number series. For example, if you were to count the number of petals in this flower, you will see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and 13 happens to be a Fibonacci series number. In fact, if you were to plant certain types of plants in the ground, and as a seedling they break out and they start to be able to germinate and become a taller plant, you will notice that the branches or the stems into branches that is built into that also follows a geometric series. So it goes from a single branch, spreads out into 2, and then spreads out into 1, 2, 3, and then goes 1, 2, 3, 4, 5, and then 8, and then you go up to 13. And so you might be wondering, what happened to the number 4? Well, it skipped that, because a number 4 in nature is not very common. Yes, it happens once in a while, but it happens as an aberration. This is the reason why sometimes when people tell you if you find a 4-leaf clover, it is a lucky clover. And the reason is because you normally see 3 leaves or maybe even 5 leaves in a clover and not 4. And so again, we see this presence. The spiraling universe outside also expands at a ratio of 61.8%. And so technical analysts try to be able to borrow this particular theorem. And they wanted to see if they could apply this into the movement or the expansion and contraction of stocks. So what they did is they studied the movements of lots of companies that moved from, let's say, a trend move from A all the way up to B. And in this particular swing, we wanted to know whether the pullbacks in this particular price are showing quite a bit degree of substance in terms of a reaction. And using the numbers that we have here, 38.2, 61.8%, and the middle ground, which is 50%. And we will draw that as a potential reaction area for this particular study. So the 38.2 is this, the 61.8% is this, and we just get the halfway point of a regular pullback would be 50%. Now this is the way this should work. Ideally, the way the concept is built is, if a stock price becomes exaggerated from going from A to B, a pullback that goes to somewhere in between 38.2 to 61.8% should attempt to finalize the need of that stock to correct. And then after hitting that zone, it should allow the stock price to be able to rebound thereafter. So here's an example. So if the stock price makes a correction and it only falls to the 38.2% zone, when you say 38.2%, that means it corrected 38.2% of this entire upswing. So when you say 50%, it corrected half the value. And 61.8% is roughly almost this range that you see down here. Now, in essence, if the correction is limited only to a 38.2%, and then you see the stock starts recovering already, that means the stock is underlyingly very strong. And then more likely, this stock has a good chance of going into a new high. Now, if the correction brings it to generate a 50% correction, that means it's lost half of its value into a correction. Yes, it might be able to rally, but it might have to generate a pattern or maybe even retest this low again before allowing it to continue moving up. And not right away, it will climb up above this point B. Now, if the stock price goes all the way back down to S3 or support number 3, and it hits a 61.8% correction, that means, yes, it managed to fulfill the corrective need, but it dropped down too much. A lot of people who probably bought here are starting to take a little bit of a loss. And because of that, they're probably selling their positions. And also because of that, a rally over here might be limited in terms of its ability to climb. And so normally after this normally will test this low again, or may just consolidate for a while before just climbing up. But normally it's these first ones here that are still very strong. And normally these ones, you probably get it back to the previous high, maybe even make a new high before the next correction is carried out. And I'll show you a demonstration of that. So here's an example of Bank of the Philippine Islands some time ago. And I wanted to show you a typical example of very strong upward moving path like you see here. Now, along with that, I drew a trend line, which you see has broken here. Now, the reason I'm drawing a trend line along with this is because a trend line becomes very important here, because if you draw the trend line and you know where the trend line breaks, you will know when and how to draw a Fibonacci tool, when to begin it and when to end it. So for example, what I've done here, as a general rule, if an uptrend line has not been violated, you cannot force in a Fibonacci retracement into a stock. It can only do that after a trend line is broken. Then you start measuring downwards. If your trend line is secure, then your trend line should be acting as support and not these measurements that you would see on a Fibonacci line. So let's just go to this particular element, because there was a trend line break here. And because of that, we needed to forecast how far down can this stock go. And by using the Fibonacci system, we started by drawing from the base of the trend move to the topmost area of a trend move. And you will see as we projected it down, here's a 38.2, 50%, and 61.8% zone. In this case, BPI corrected to the 50% zone. And after that, it rallied, tried again, second time, and then eventually it rallied already after that. So this is still okay. But if this pullback went all the way back down to the 61.8%, the rally you see here is not going to be as strong. It will take more time for that to be able to recoup back to where it's come from. Now, in a decline, you can also use the Fibonacci tool to be able to do this. Now, here we have a downtrending situation. I've drawn a downtrend line by connecting this top to this top and all the way to this top here. And you will see that price is ruptured above that area there. So now this is telling you that the stock from a downtrend is trying to be able to generate a wider rally. In a wider rally, we will now use the Fibonacci tool to try to be able to estimate how far upwards would this rally go to. So given the context that the downtrend began here, we will use this as our base. start here, extend it downwards to the low. I normally tend to ignore this daily wicks of prices because they're not very heavy impact of support. It could also be that perhaps only a small amount of shares were traded there. So I usually like using the bodies of the candles to express the high and low ranges of a stock. So given that, projecting upwards, now you would see the 38.2, 50%, and 61.8%. Mind you, that you can see the numbers have turned themselves around. In an uptrend, you see the 38.2 is on the upper boundary and the 61.8% is on the lower bound. But since you turned the trend upside down, and now the rally is what we're trying to figure out, a 38.2% rally should come first, and the 61.8% rally comes in last. In this case, ICTSI did make a rally, and it only rallied up to the 38.2% zone. So if I were to look at this, the rally was not that strong because it did not manage to be able to recoup back to the 50% nor the 61.8%. And because of that, that means this stands good chance that this could come and retest that low. And so in this effect, I would take to be able to sell a portion of whatever position I still have here because I can feel the resistance there in preparation that this might come back down and I want to get a new buying opportunity at a lower price. And this is how we come around to use the Fibonacci retracement system to help you make an assessment of how far a stock could go, especially into a recovery or a correction point. So again, please remember the trend lines become very useful here. Because remember, if a trend line is not broken, you do not use a Fibonacci tool to try to see where prices will go. The trend line should be the one to tell you where that is. It's only when a trend line breaks that you use a Fibonacci tool. Now, let's try to demonstrate to you how to be able to call that tool out in our charting program and how to actually use it along a graph like we see here in the case of Jollibee. All right, so let me walk you through this. So we'll start with Jollibee here. And what we're looking at is we're looking at this uptrend, which began sometime in April all the way back up here and eventually went sideways into a correction before going back up. So let's try to make an application here. So first, we will draw a trend line. All right, just it there. Now, you can see that every time prices rebounds from that trend line, it's acting as support, but there was a time that it broke it, and that's where a wider correction took place. So we'll use this Fibonacci tool you see here. And again, we will start on the bottom range of the trend and connect it to the topmost range of the trend. And you will see here on the right, you can clearly see that it's marked off the Fibonacci retracement areas automatically. And you will see where prices happen to have just stopped. They stopped at the 50% zone before moving higher. In fact, it tested that 2 times before attempting to move higher. And so this is an example of how we can try to use that to our advantage. Let's look at the downtrend of Ayala Land. Let's draw first a trend line so you know how to draw a Fibonacci tool. First, I will draw the longer term trend line. Notice there's been no trend break in that one. I'll draw another one. There is no trend break in this one either. Let's draw the third. All right. And in this one, there was a trend break here. And so this is the trend involvement that I will begin to draw my Fibonacci tool retracement. I will start from the top of the trend, and I will draw it to, again, where the body is. I don't like using those wicks, those tiny wicks for a single day. I don't like using this. And so again, it automatically draws at 38, 50, and 61.8%. In this case, the maximum rally went closer to the 50%, but generally stayed into the 38.2% zone. So this rally was just so-so, not so weak, but not so strong. Let's look at one more, Globe Telecom. Very sharp up move. Let's draw this trend line here. And you can clearly see there was a correction after the trend line was broken. We'll do the Fibonacci line now. All right. And now you will see that the correction went to the 38.2% zone. And that means the correction was very slight. In fact, that's the reason why Globe managed to be able to recover quite well recently. And so you can use the Fibonacci tool to make a prediction as to how far the stock could go so that you're prepared to understand that if there's support here, I could probably enter the stock in this area if it doesn't break. And if it breaks the 38.2 after you bought it, you can use it as a stop loss point, because then after that, it will go down to the 50%. And if that's broken, it will go down to the 61.8%. More likely, if it goes even below the 61.8%, the reason for that would be because a trend change had already taken place. So try to practice using your Fibonacci retracement system. It can help you make an assessment as to where next support levels can be, or in a downtrend, where the maximum rally points can be. And that can prove to be very timely for you to be able to take advantage of your entries and exits as well.